So, thought I'll quickly go through um, something that I had talked to you about. So, what I'm going to be doing is essentially, uh, oh, okay, what I'm going to be doing essentially is like whatever I've thought so far, right? I start tying it back to actual concepts that we can see on the charts.
Hmm.
Okay,
Mhm.
because till now I kind of fast forwarded it so that um, at least the language that we're going to use is something that you start becoming familiar with. And when I actually start showing it to you on the chart, you can actually connect it back to the slides that I had presented. Okay. Hmm. Okay. So one thing that I talked to you guys about was market profiling. Okay. Or rather weekly profiles. These are called weekly profiles. Okay. So basically the weekly profiles, essentially there are a few different profiles that ICT has come up with. There are at least these profiles are the ones which are mostly relevant. Okay, which is what is in the slide. The idea of the weekly profile is you can actually frame your trades based on is what could happen in the week. Okay, so on a Monday you see a smaller range. Okay, you see a smaller range, and then you it goes all the way through till Thursday or Friday. Okay, that's a classic expansion week. Okay, where just price just keeps going higher and higher and higher. Okay, and if you notice, the low of the week is on a Tuesday, high is on a Thursday. Okay, um, and of course it could be the other way around also. This is the bearish profile, right? And you could have something like a consolidation reversal where basically consolidates the whole week, okay, and then it shoots up on the last day, okay. So how the idea is to predict which of one of these profiles is most likely to happen on which day on for the week, okay. In order to do this, what you actually do is you actually look at the economic calendar.
Hmm.
Okay, you go to forex.com or trading economics, whatever you want to use. For example, you go here. Let me see if I can increase better.
No, we are just seeing your PPT.
Uh,
Didn't we cover this already?
Yeah, yeah, it's covered. I'm just going to tie it back to the charts. That's what I'm going to do.
Okay.
Okay. So if you look at it here, right? So this is, okay, this was the next week. We'll go back a couple of weeks. Okay. So this was the first week of September. Okay,
Hmm.
which is what we were discussing last week. So if you see, basically what you're going to look at is say, okay, you have whole bunch of red folder news. So most likely what's going to happen is that Monday is a bank holiday, not worth trading. It'll not be a big range. Okay, so and then there's a red folder news pretty much every day. So that means market is going to move, and since NFP is on Friday, it's going to move a lot.
Hmm.
Okay. So then you can basically say, hey, this looks like a classic expansion week.
On which side?
On which side that you have to determine,
Hmm.
right?
Uh-huh.
And that is where your bias comes in, your higher time frame analysis comes in, and then this is how you basically tie it and say, okay, fine, this week is a good week for trading, okay, because I have a lot of red folder news, and that will help me trade and get my money is worth on it. Okay. So now you know that it's most likely going to be a classic expansion week because of
Hmm.
the huge amount of news. Okay. Now let's go back to the charts. the, it is this week. Okay, if you look at it,
Hmm.
Monday was what is this? Okay, Monday was basically, if you look at back at the the slides itself, you'll see that Monday was a small range day. It went
Hmm.
up slightly, and then Tuesday it formed the high,
Hmm.
and then it just expanded all the way down.
Down.
Okay. So what you can realize is that typically Mondays will always be some manipulation. So that's why you'll always see Mondays going in a certain direction. So you can always like look at Monday, see what is happening, what they're trying to do on Monday, assume it's going to be manipulation, okay? And then you start looking to frame trades going in the opposite direction. That is one way of looking at it. Okay. So since you know that all the days were red folder news, so the likelihood of it being a classic expansion week throughout the whole week is more likely. Okay. So this is how you use weekly profiles to try and figure out how to manage your trading. Okay. Now let's look at
So the idea behind is if there are a lot of red folder news, then it will go in one particular direction.
most of the times, yes.
Okay.
Okay. Sometimes what happens is that the you'll okay, we'll just go forward. Uh, okay, just okay. So the idea is to then predict what could happen the next week, right? Okay. So this is the next week. Um, that is coming up, meaning or rather the previous week that we had, where we had the CPI. So
Hmm.
what is likely to happen? No news on Monday and Tuesday. You're not going to expect a large range on those 2 days. Okay. Wednesday is CPI. You can expect a major movement on CPI day. Okay. So what you can say is that Wednesday is the day when I will either see the high of the week or the low of the week, and then it's going to move expand. Okay. So Wednesday is the day when you will see the maximum expansion.
Hmm.
Okay. And then you have PPI. PPI is not as big a mover as CPI, but you expect PPI to also move the market in a certain direction. Okay. Most of the time, these two are in alignment. So I don't see a big issue about the thing, but so it'll not like one day it'll move higher and the other day it'll go in the opposite direction. Inevitably, there'll be some amount of manipulation happening somewhere, and then things will start moving. Okay. Let's go back and see what is happening on the charts.
What do you mean by yes, yes? Get out now.
Probably. So I'll just rush through this so that at least we can see. Let me just remove the replay. That'll be the best. Okay. So this was the point. This was Friday.
Which Friday?
Previous week. Week to week. This was the NFP week.
Okay.
Okay. This was last week.
Mhm.
Okay. So let me go to uh, chart. Okay. I can even use this. This will also help. It gives me lineation. Okay. So if you look at this, okay, Monday and Tuesday was okay. Wednesday is when things really start moving. This is where you saw the manipulation happen, right? If you look at this thing, this was essentially a lot of manipulation that you can expect before CPI. Okay, look at this. This was impossible to trade, to be honest. Okay, Monday also. From starting from Monday, all you can see is consolidation happening. You can see
Mhm.
Wednesday is when the actual move started. So you can start trading from Wednesday onwards and then continue. Trying to trade on Monday and Tuesday would have been very difficult, and you wouldn't have been able to trade as easily as compared to Wednesday.
Mhm.
Okay. So this way, what you can then look at is saying, okay, fine, you know what, maybe let me not trade Monday and Tuesday, but let me look for the setup that will happen on Wednesday and then start using that as a means to start trading. Okay. So here, even though Monday was the lowest week, that was primarily because it was coming off the low base of the NFP week. Otherwise, you would have seen this candle a little more thing. Okay. So So this is how you basically use the calendar to try and predict from when you will actually start seeing the movement. Okay. So if you want to take a trade, Wednesday is the day that you want to take a trade on. Okay. Even if you want to do a swing position or whatever position, right? You look for the manipulation, wait for the manipulation to happen, then you take a trade somewhere in this region and then just hold it.
Mhm.
Okay. So this is how you know. For example, you want to you want to buy some stocks, right? You want to try and figure out, okay, this week I want to invest money. Which is the best day to invest? You look at the economic calendar and then figure out when is the day that is most likely that it is going to expand, and you want to basically make a move before that. You look for the manipulation, look for it, you go and see, okay, fine, now I can see the manipulation, and then you should go and buy in at that time. And then you can just see everything going here. If you try buying here, it'll go down and you'll start thinking, oh shit, it's going in the opposite direction. You'll get scared, and a lot of people would have sold.
Mhm.
Okay. So this gives you an idea of like how to prepare for trading and when are the best days for trading. Okay. So coming back to again upcoming week. Okay. What is most likely to happen? You have core retail sales on Tuesday, right? So Tuesday it will move a little. So they will use Monday and Tuesday to do some amount of manipulation. Wednesday is going to be the big mover with the FOMC. Okay. And Thursday unemployment claims. That's okay, I guess. That'll also move the market a little. So these 3 days are the best days for trading. But on Wednesday, you don't want to trade in the morning, or actually, since it's in the afternoon also, um, you can look to see what is going to happen on Monday and Tuesday and see if they're going to be doing some manipulation. So if they move the market in a certain direction, right? Then you can start looking to see what is the path that is most likely to happen on Monday and Tuesday, and then use that to say, okay, now I know what is going to happen on Wednesday. Okay,
Mhm.
so we were talking about this yesterday, right? So what is the likely path that could happen? One is if on Monday and Tuesday they do something like this, right? They go high, take out these highs. Then most likely on Wednesday during FOMC, they will bring it down here.
Mhm. But Usman, like
And then
when
probably move it higher.
yeah, but when in 40 56 44 or something, there's a huge fair value gap, right, on the back. Uh, as
Here,
in the top also, there is after there is some huge fair value gap, no there.
yeah, here,
Yeah.
yeah. But okay, but the thing is, these are very close, meaning FOMC is always a big mover. So you need to
Uh,
then look at a major movement or almost like equivalent to NFP or CPI. Okay. So if you try to measure it, this was NFP, right?
mm,
Roughly, look at it. CPI was almost the same. FOMC will also be somewhat the same.
oh, the relative jump, huh?
Ah. So if you look at it that way, it's going above all-time highs.
Mm.
Okay. Or it can obviously go in the opposite direction also. Right? It can do this also or something. It can come back. It can try to revert back to me. Right? But FOMC is always a big mover. You know what? Because what is happening right now, right? The narrative that people are saying, oh, Fed should essentially reduce the rates by 50 points,
They
right?
reduced by 25 points.
Yeah. So they're drumming all of this and they're saying, oh, if they reduce by 50 points, the economy is going to shoot up, blah, blah, blah. And finally, what they will do, these guys will go back there and say, no, 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 we'll do a wait and watch. We'll do for 25 basis points. And then they'll say, oh, this is the reason why we need to bring the market down.
Mm.
Okay. But all of these, this is how they manipulate the market. They want people to think a certain way. So if you see that they're actually pushing it in a certain direction, right? Then that means most of the times they're just trying to manipulate it so that things move in a certain direction and they make their money by manipulating the other way. Okay. So the thing is, now you know that what you need to do is look at Monday and then look at Tuesday. If it goes in this direction, FOMC most likely they will do something like this and then take it higher. Okay. So this would mean that on Wednesday you're going to be looking at either the high of the day to high of the week to form or the low of the week. Because if they do it like this, right? They do something like this. They do something like this. Most likely they'll do this, and then on Thursday or Friday they will revert back to mean and bring it back here. Now, this is the actually the better thing for us to happen. Because they come down here, take a little bit of liquidity. If they even bring it all the way down here, and then you can expect a major jump on FMC. This would be the
on
most ideal thing for us to
on
expect.
Wednesday.
Yeah, on Wednesday, we want this to happen.
Mm.
Otherwise, what will happen is something like this. Okay. So basically, this is how you form your thesis for the upcoming week. Okay, you use the economic calendar, then you watch what happens on Monday, and you watch what they do on Tuesday, figure out where they are doing the manipulation, and then you say, okay, this is what's going to happen going forward. And then you roll it up, and then you can frame your trade accordingly. So every day in the week, you take a look, and then you associate with that with the calendar, and then use that calendar to be able to figure out, okay, this is the direction that they're taking the market towards.
Mm.
Okay. So so using these weekly profiles is very critical in that sense because it will help you take those trades which will stay longer and go longer.
Mm.
Okay, rather than just jumping in and trying to say, oh, let me trade. I don't know which direction to trade in, and etc. etc. The economic calendar essentially will tell you what is happening and what is most likely to happen.
Mm.
Okay, all right. So I just wanted to cover this. Now let's look at I wanted to actually take a look at the price action on what happened this week. Okay, and try and see how things actually moved. So now we know that there was the daily fair value gap here, right? Which we came to during NFP, and then price essentially consolidated around here. Go to the 15-minute chart. Let me do okay, and then we'll go to Monday. Each day we'll do. Okay, so this is interesting. Okay, so what happened here was that they brought the market down, right, during NFP, and then they opened up higher. Can see a gap here.
Mhm.
This gap.
Yeah.
Okay? So this gap is also what ICT refers to as new week opening gap. Okay. One way of looking at it is that this is yet another fair value gap. Okay. But this is a very specific one because this becomes relevant simply because price will keep referring to it at some point of time. Okay. Let's see how that works. I'll just leave it here for now. Okay. And then we'll see how it actually plays out. Okay. So what happened? Now what we saw is on Sunday itself they started rallying a lot. Okay. When you see that there's such a huge movement, especially on a Sunday or in the Asia session, right? So when that happens, you can expect a lot of consolidation and seek and destroy happening during the regular sessions. Okay. So basically since they went all the way up here, then on Monday, okay, Asia went up, London went up. Okay, so New York AM and thing, they basically went, took out all the liquidity, moved up, they came back down, took more liquidity, went up, came down, went up, came down, went up, came down. So that's all they did. They were building up liquidity because they knew CPI was incoming. They already made sure that whatever was there in NFP was taken care of. They pretty much revisited all the gaps, right? And they took care of everything, whatever is there. So this was the last gap that they revisited on the NFP side, right? Because this was a rapid movement. They made sure that they covered up all of that in a way, kind of reverting back to mean kind of a scenario also. But this kind of rapid movement means that seek and destroy conditions will happen during uh, New York sessions. Okay, where they're trying to do is manipulation so that they can take all the liquidity that is available because they're waiting to make sure that they can make a bigger move. Okay, so that's essentially what happened. Were there ways that we could have taken a trade here? Possible. Let's see. 5-minute chart. Are you guys following or
Mhm.
going too fast?
Yeah.
Yeah.
Okay. Now let's take a look at the entry patterns that we had and see if any of those would work for us. Okay. Now doing a standard deviation on this range actually doesn't make too much sense because it just moved in one direction.
Oh, mean and all those things will not work, right?
Yeah.
Point
I
point
mean,
five.
it could probably still work, but it'll become very difficult. Okay. Let's try anyway. Let's see. This was the lowest point. Okay, but then you're looking at something like this.
Mm,
Okay, so this was disabled in zone.
interesting.
Reversal will happen somewhere here, but that'll be too much. Is there any other thing? So you need to look for where is the possible manipulation that we can actually. Okay, maybe this one. I'll just leave that there still. We'll see if it is relevant at some point. So this was 8:30. Okay. This was 8:30. Okay. So let's see. Yeah, this probably made some sense. Actually, no. Yeah, maybe. Yeah. So since there was a manipulation back here, okay, I used this leg. Okay.
Mm,
So how did I choose what thing? Basically, this was the low. Wait, this one. This was the low, right? And I chose this higher high. Okay. And this was the breaker. This was the highest high or I could even use this, but okay, I kind of like this one. Okay, because after that it actually comes down again, creates a lower low here. Okay, so I could use this or I could use this also. This will also work actually. Let's use this one because this is the first immediate manipulation that happened. Okay, this went higher, right? And this actually went low again. Okay, so this created the swing. So this was the first swing point. So I'll use this. Okay, and this was also the breaker, but that trade would have happened here. Okay. Fair value gap.
So,
This was a breaker. I'll do this. Okay, can you see?
mm,
Okay, so since normally this went high and low, right? So this becomes the breaker. There's a higher high here, there's a lower low here. So this became the breaker block. Okay, and this was the low. It created one fair value gap here. Okay, but if you look at it on this side, there is no fair value gap except here. This was the first fair value gap.
which day you're looking? Monday,
Monday, 9th
9,
September.
9 September.
Okay, there was one fair value gap there, right? Okay, so this basically the first trade that you could have taken was here around 8:45. Okay, and this trade would have happened essentially because there was a breaker block here and a fair value gap here. Okay, normally 8:30 you see this manipulation and then you start seeing it going up. This is a pretty safe trade if you're experienced enough to understand that. Okay, but normally I wouldn't advise taking a trade so early because it's actually very difficult for you to actually know if this is really the case. Okay, so what I essentially told you was we needed fair value gaps on opposite sides. There's one fair value gap here. There's another fair value gap here. Okay.
Mm,
And then there's another fair value gap here. Okay. I now have two fair value gaps. right? That satisfies the other condition. Now, where is the market structure shift that's going to happen? On which candle would the market structure shift happen? So normally the candle holding the breaker, right? Wherever you see the breaker, that is where the market structure shift will happen. Okay. So this is where the market structure shift happened.
Where? Oh, that one.
Okay. The other market structure shift that you can look at is this one. Okay. Because this is also slightly higher than this one, right? So this was the other market structure shift if you wanted a second confirmation. Okay. Now, this fair value gap that you see here, right? This is where ideally you can take a trade. Okay. But you'll have to set it up before the market opens. That's the only problem with this.
Mm.
Okay. So if you had actually taken this trade before the market opens, looking at the structure and saying, okay, I got my market structure shift here. Okay. I have my opposite fair value gaps. I can see that this is a breaker. And we can see that there is this fair value gap, two fair value gaps confirming that it is going to move in the opposite direction. Take a trade here and hold, because after that you don't get an opportunity. There are no fair value gaps after that for you to take a trade in this direction at least.
Mm.
Okay, see, there's no fair value gap, nothing. There's one here, but price doesn't come back to that, and it's very high, so it's actually quite difficult to take a trade. The other thing that you need to look at is premium and discount. You will probably say this is the high, this is the low.
Mm.
Are we in premium or discount?
Mm.
This is the perfect place to take it, because this would have been the first target that you would want to hit, or anything higher. Okay, because this was the swing, right? And then obviously if you want other targets, then you go look on this side and then say, what is that here? Okay, I have a fair value gap here. I have this one here. Okay. This was one target that you could have taken a look at. Okay. The other one was this, obviously, and maybe something higher also, but no fair value gap, no fair value gap, nothing. The last other fair value gap is here. Okay. The other way of doing this was basically trusting your standard deviation and then saying, hey, okay, you know what? It could reverse at this level. So that is one option. So the minute price goes somewhere in this area, you you take off your trade, or you basically leave a runner and then just hope for the best that it will go all the way up. In this case, it went up to this fair value gap, and it went beyond this point also. Okay. Ideally, what you want to do is you want to go to the 1 hour chart. Okay, where is it? Very good. To frame your targets. Okay, so this, okay. So there was a 1 hour fair value gap here, right? That was only fair value gap that was there on the 1 hour thing on the NFP candle. So yes, so this was a good reason why price came up to this level. It would revisit this level at some point of time because they have to cover this gap. Yeah.
Mm.
So normally what you should be doing is you should be looking at the higher time frame to figure out which gap they're most likely to cover. Okay, and which would be the ultimate target for them. look at 4 hour, 4 hour, there's nothing. It was just this one, which they already covered before itself. So that doesn't make sense. Okay. So now I'm going back to 5 minutes.
Hmm.
Okay. So this is where you could have taken a trade to go towards the high. Okay. And you would have said that, okay, this 15-minute and this 1 hour fair value gap, somewhere around here, I can expect a reversal. Okay. If it has to happen. Why? 1 hour fair value gap is a higher time frame PDRA. So you can probably expect a reversal in and around this area.
So fair value gap, higher time frame has more value than the lower time
Yes,
frame fair value
always,
gap, right? Right. Got it.
always.
Hmm.
Yeah. Okay. So that's essentially what happened. Didn't allow too much of an opportunity for anybody to get in unless you got in before the market opened. Okay. So this would have been a good choice based on all of these factors. Okay. Because it did make sense that they were going higher because there was this liquidity here that they had to take care of. Okay. So that is the reason why they went higher. Okay. And the overall bias was still to go higher and complete that gap. So they pretty much went almost all the way to cover up the gap. Okay. So the things that I did the standard deviation, right? I did the premium and discount. Okay. I looked at the key level 830. Normally there should be a manipulation around 830, especially after the big run up. You look for the next big manipulation, which will happen around 830. There was a manipulation, then I structured my trade based on that. Market structure shift, I could either use this or this. Okay. And then I see two fair value gaps going higher in the same direction. Okay. Makes sense. There's one fair value gap here. Okay. And so there are fair value gaps in opposite directions. Okay. In the opposite sides of the curve. Okay. So I am ready to take a trade. So you take a trade and then it goes higher. And then you decide where you want to sell.
Hmm.
Okay. And then after that, it just started coming down. At what time did it start coming down? 10:30, almost 10:15. So it went all the way up till the 10:10 macro,
Hmm.
right? 9:50 to 10:10 macro. This was the 9:50 to 10:10 macro. Didn't recall. Not able to recall that. 9:50 to 10:10. Okay. So it exactly happened during that time, 9:50 to 10:10. Okay. Went up, it shot up. See, you can see the rapid movement. Out here, it was all lethargic. Came to New York Open. That was the moment. Then it slowly fizzled out, came down, and then exactly at 9:50, it just shot up. Okay, and then they decided to take the market down until around 11:15. This was around 11:15. So, and then they decided to go back up again because they wanted to fill this gap up. And again, if you look at it, it's not offering any trade opportunity. Here also there was, if you look at it, there are fair value gaps on opposite sides,
Hmm.
right? So this move essentially came to take this one out, okay? And probably something here, some fair value gaps out here or some level out here, it came and took that out.
Mhm.
Okay, so let's see if we can figure out what it tried to take out. This fair value gap here and an order block here. So it came exactly to this order block.
Mm.
This one,
Mhm.
exactly to that, to the open of that. Okay, and then it went higher.
To understand the volume, there is a volume candle also, right? I cannot see it because it says some premium account. Does it help?
No,
Acha.
because it doesn't matter. Okay,
But the size of the fair value gap or
no,
size
it doesn't matter.
volume inside the fair value gap
No, it
does
doesn't matter.
matter. Does
It
matter?
doesn't matter. Okay. Okay. So this is the reason why it came down, because there was this fair value gap it had left behind. And if you look at it, right, this London low took out this fair value gap here.
Hmm.
So there wasn't much liquidity left here, and I don't see too much liquidity anywhere else. One out here, but this was very low. So I don't think it would have been worth it because they wanted to fill this gap up, because there's no point coming all the way down here and then going up back up there, especially because they have CPI coming up. They don't want to make such a big move. So they just came, took out what was there in London, and then went up. Okay. So that's essentially what they did here.
This MSS kind of retains its significance over the period of like higher time frame. Matlab, there are so many MSS that happen, right? Like,
Hmm. No, meaning you don't pay too much attention to it until unless you're looking at a reason to take a trade.
okay, okay, okay.
Okay.
Because
Beyond
this
that, you
MSS
don't want to
keeps
look at it.
happening, right? At some point they
Yeah,
shift
it'll
and
keep
then
happening. It'll
yeah.
keep happening. Okay, for example, even this reversal, right? If you look at this reversal, this candle, there was a market structure shift
Because
because this was the low.
no.
Okay. And the second market structure shift was here. This was the next low.
Hmm.
Okay. So if you wanted to trade this down, then this is where you look at it and say, okay, significant displacement, fair value gap created, but nothing went into this. You didn't have an opportunity to take a trade.
Hmm.
Fine. You can always blindly decide that you want to take a trade.
Hmm.
Okay. And you can say it's going to go take this out and just say, okay, sell here and target this. That will be your safest thing, right?
Hmm.
But you need conviction to do that. That's all
Hmm.
I'm saying.
Yeah. So it's the fact that it came down to the lows and then shifted the structure.
Yeah.
Okay.
Because it came way too low. See,
Huh.
end of the day, you want premium and discount.
Right.
Anything that if you want to sell, you want to be able to do it, you know, above this,
Huh.
right?
Right.
So the first opportunity that you got was out here.
Hmm.
Okay. So normally what would happen is that once you get used to it, you'll probably, that, okay, you know that it's going to go here. You want to take this out. And then you see this happening, you see the reversal happening, and you see this, then you say, okay, fine, let me go to a lower time frame chart. 3 minutes, 2 minutes, and then see if you can actually find a way to take that trade.
Hmm.
Okay, I went down to 1 minute. Let's see. Even there, it was very difficult. See, on the 1 minute, you can see the same structure happen. Fair value gap on this side, right?
Hmm.
Fair value gap on this side, right? Market structure shift here, right? and then you get an opportunity to take it here,
Uh, put, yeah,
right? You see that?
a sell. Okay.
Okay. So on the 1 minute chart, you got an opportunity to take it, but on the higher time frame chart, you didn't. Okay. Okay. Because this was the other market structure shift that happened. Again, there's nothing here. Here, you could have taken a trade based on this market structure shift, but then you're already in discount, right? So that means that the chances of you making a lot of money is less. Plus, you never know what is going to happen. It could have come here, take look at this consolidation, and then maybe decided to go away from here only.
So let's say you're at 945, right? So there is a market structure shift, 945, that left one,
Hmm.
this one.
Hmm.
So from there, it is going up. So where would you take a trade? You said.
From here,
Uh,
from this one. No, this is
uh,
the market structure shift which is happening on this side of the curve.
okay. Okay.
Okay, it's only relevant here.
Oh, it's only relevant here.
Exactly. It is not relevant on the other side because on this side you don't. The market structure shift happens on this side. It's this side of the curve. Only these are relevant.
Okay.
Okay, if you want to worst case, if this was the first area, right? This was the second one that you could have taken a look at. Sorry, little lower, but right. This was the other one. I'm not placing it in the correct place, but just to give you an idea, right? These are all the places the market structure shift happened. Anytime the market structure shift happens, it gives you an opportunity to take a trade. Look, market structure shift happened, price came back, fair value gap went up. Market structure shift happened, came back again into this fair value gap, went up. Market structure shift happened, came back again into the fair value gap, and you could have taken the trade. And there's nothing else here, so there's no point. So this would have been your last opportunity. Or you can even look at this as a minor market structure shift.
So what is the logic behind that? I know you explained, but market structure shift on the left side, how it impacts the right side?
Because when we say market structure shift, right, it
Hmm.
basically means that I talked about the sell side of the curve and the buy side of
Yeah,
the curve,
yeah,
right?
right.
So this was essentially the sell side of the curve.
Sell side of the curve, yeah.
So the market was going in the bearish direction.
Right,
Now it is shifting
right,
to the buy side of the curve.
right.
So this market structure shift is essentially indicating that, hey, I'm done with my selling. Now I'm going to do my buying.
Okay.
Okay. So that means that I have shifted my structure from bearish to
The
bullish.
bullish, right.
Right. And here I'm basically indicating, hey, I'm shifting my structure from bullish to bearish.
Bearish, yeah.
So that is what it is indicating.
But the point you pointed out, let's say at 8 a.m. in the morning, that is this point, right? The top point here, 8 a.m.
Here, this one.
So this the right side, right side. There is a top one. Let's say pick anything. So uh, here 8 o'clock in the morning, the left side. So that point, it of course it started bearish, and for that point to correspond to the right side, is that a point or it is just stopping somewhere? I'm just trying to figure out this piece. To take that point. Okay, let's take that point. So that is a point where it changes the direction, right? So it came down. So from buying, it started become selling. So that the length of that point, you're stretching it to somewhere right side, right? So the right side, are you stopping at some point, right? Saying that there is a shift again, right? Yeah.
So
So
basically, you want the market to actually, in this case, right?
uh,
This is like a good market structure shift.
uh,
Okay, well, let me see if I can make it bigger.
uh,
Okay, what you really want to happen is that the you want the body to close higher.
Hmm.
Okay, the candle body should close higher. So this it's essentially up to this point, which is what you want to actually put it across.
Hmm.
Okay,
Hmm.
this candle it wicked higher.
Hmm.
Okay, and then came back down. This is not a
Right.
market structure shift.
Okay. Okay.
Okay, this candle created a market structure shift.
Uh, it
Okay,
came up. Hmm.
okay, here
Okay.
also. Let's
Uh,
go here, right? I will draw this until I see a complete market structure shift.
uh,
Okay, ideally, because if you look at it, all of these candles, maybe this you can look at this also as a market structure shift. Okay, because it kind of, but it kind of touched it, but it didn't close above it. Okay, so I would consider this as the correct place where the market structure shift happened.
okay. So the previous kind of the change in direction is impacting the other side of the curve
Mm,
when it is not closing at that point. Okay.
yes. Okay.
When yeah, okay.
Mm. So you have to basically wait until it closes above that. Then you know that, hey, okay, now I have taken care of everything that was here.
Uh,
Okay, I finished my business. I moved my structure higher now, because all of this is like tentativeness.
uh,
Should I not? Should I not? Should I not? Right?
so if it hits that point, you're sure that it is going to change again.
Yeah. Once it goes and closes above that,
Uh,
then you know for sure that it is going to change direction.
okay.
So then you wait for this retracement to happen.
Uh,
Okay, and then once it comes into the area that you know that you can take the trade, you take it here, and then it moves.
yeah. So what about this one, the upper one? Then it
This one,
did not change, right? The direction it kept
it
when
went,
going.
it went,
It
came here.
goes
This candle closed above,
above. Yeah. Then
so
it
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 changed direction, and
uh,
you can't see the wick here because of this thing, but
oh, okay. So it was a huge drop,
it's a huge wick. Yeah.
but it was very quick, right? It came back again. So it's so difficult to take a trade there then.
Yes, meaning basically what happened was there were two fair value gaps here, right?
Uh,
This one. So you could have taken a trade at this point, and there's a fair value gap here.
mm,
So you can take a trade at either one of these fair value gaps.
mm.
Okay. It will not come here because price has already come here. There's no point.
Yeah, it's
There's no
consolidated already.
point doing anything
Mm,
here. So these are the two places where it could go. You can
mm,
be in, but it's not necessary that it'll price will go here. Okay.
mm,
That's the
Uh,
problem there, right? Like, say you saw two fair value gaps
hmm,
and you took a call,
hmm.
suddenly dropped, all your premium is gone, or
Yeah.
whatever stop loss you have set
So
is on.
normally what you would do is this, right? So this was the leg up, right? Where is this? So you basically, where did this happen? Here. Okay. This was a difficult one, to be honest, but still. So what you would prefer is if you manage to figure out, okay, my market structure shift happened. Okay, fine. Then you go put it, and then you start seeing this candle going lower, right? Put this, look for premium discount. You always take your trade only in discount.
mm,
Yeah, that I will ignore. If it comes here and then goes up, you know what? I'm not interested.
mm.
Okay, and you say I will only take it if it comes here. Then you put your limit here and then take it here. So that way you are limiting the amount of thing that is happening. That is
Mm.
another way of doing it.
So if I understand this correctly, each time you say, you see two fair value gaps, you put a premium discount thing to determine whether it's a premium or discount and then take a trade.
Yeah. So the problem with this is sometimes what happens is it will not come down. It'll see come here, take the liquidity and just go up.
Mm.
Okay, that will happen. That happens a lot of times. Okay, because price is in a hurry, he doesn't want to go all the way down, he doesn't want to give you an opportunity. So they will just come, take it, and go, and that's it. Okay. So if you look at this one here, right? If you missed this, it went up and then again came back down. You could have still taken a trade when it came back down here.
Yeah, but compared to the last
But
point,
then
it
what happens
went
is,
down again, right?
I
That's
know.
that's
Then
what I
what
think
happens
Majid
is
saying.
you basically extrapolated back up,
Mm.
right? Now it is in discount. This fair value gap is in discount,
Mm.
Go fast.
right? So now it makes sense to take the trade here.
Mm.
Okay. So you take the trade in this fair value gap and then you hold it up to whatever point.
Where do you draw the PDR also matters, right? I mean, if you go to the lowest point in the left side, like 645,
Hmm.
there I think some are premium, some are right. I mean, like you draw here, but if you draw from here, there'll be different. But when it is happening live, you don't know where to draw this PDR, right? So,
Yeah, meaning that is the challenge, right?
uh,
Okay, that is why when you do the analysis like this,
Mm.
it sounds a lot more easier.
uh,
But the thing is, you do this because you need to understand,
understand. Yeah, of course, we
right?
have
You need to
all
understand,
the tools
and
to
then when you're
see the
actually doing the
pattern.
trade, yeah, you see the patterns, you get used to it, and then
Mm,
you start seeing and doing it. So normally, because I'm on the 1 minute chart, right? It makes it
mm,
that much more complicated. If I change
mm,
to a higher time frame chart, okay, it looks a lot more obvious sometimes.
mm.
Okay, I don't know that. Okay, you are here.
ಯಾವ ನೈಜೀರಿಯಾ ಎಲ್ಲಿ ಹೋಗ್ತಿದಾರೆ ಮಕ್ಕಳು ಬೆಳಿಗ್ಗೆ ಬೆಳಿಗ್ಗೆ
Huh?
ಎಲ್ಲಿ ಹೋಗ್ತಿದಾರ ಮಕ್ಕಳು
ಇದೆಯಲ್ಲ ನಮಗೆ Sunday
ಓ
school,
ಸಂಡೇ
and I need to go for volunteering.
Okay, it's 8:30 already. Okay, I finished only one day. Okay, so but at least I think now you understood how. But like I was telling, you move to the higher time frame chart, it becomes a lot more clearer. Okay, because you are not looking at this stretch. Okay, you are looking at this one or something else on the other side. Okay, I don't know why I put okay. Okay, and then you frame your trade based on it, then your premium discount makes much more sense. End of the day, if you can do this on the lot of people do a lot of scalping. Okay, even I do a lot of scalping sometimes. Okay, then you start looking at the lower time frame chart too, because then you're looking at a smaller horizon in terms of your trade. Okay, and then when you go to your lower time frame chart, then you use you try to do this a little more dynamically. Okay, and if you stay on the charts long enough and you keep looking at the structure, then you'll get it. You'll
get a
get it at
pattern.
some
Yeah,
point
yeah,
of time.
yeah.
Personally, for me, it took a long time before I could
Mm.
be comfortable with it.
Yeah, the idea
It
is that
took
it's not random. Nothing is
Yeah,
random.
yeah, okay, and yeah. So if you, okay, so basically everything worked out here. Okay, your standard deviation projection worked out. It went exactly between -4 and 4.5, and then reverse direction, right? And then this came back down here. Here again, same problem. Very difficult to take a trade. There are fair value gaps. There are market structure shifts. The market structure shift happened here. This was also an opportunity. Okay, and then but on the 5 minute chart, no opportunity to take a trade. Just didn't give you an opportunity. This was the last only place, but then you're too close to where you need it, the top. You would lose there's no point taking a trade so high up, completely to the long. So once you get to this point, then you're looking for a reversal and see if you can take a trade in the opposite direction.
Yeah. Do you see MSS here in this?
Right here,
Uh-huh.
yeah, everywhere, right?
Yeah.
Here,
Mm.
there's one here.
Yeah, no, at the top we don't see, right? We cannot predict when it will reverse, kind of thing. When it goes in
This
this.
side here,
Uh,
no, not anymore, right?
uh,
Because the minute it crosses, this was your target.
uh,
Ultimately, this was your target.
right.
Okay, because you don't want to hold beyond that, to be honest. Okay, because you now reached the 1 hour fair value gap. You know that you're in premium of the bigger range.
Mm,
Okay, of this range, big range already. This is the larger range, right? You're already in the premium of that. See.
mm,
Okay, so now all you're looking at is trying to frame a trade going backwards. Okay, so it's the next day, but no, okay. Again, all of this happened after things. No, you can't trade this part. So it's after 4 o'clock, can't trade this. Okay. So other thing we should take a look at is always what times did it happen? 11:15. Okay, so basically after the 11:10 macro, they decided to take a turn. So normally this happens. Okay, around 11:30. So this would be the 11:30 kind of a situation here. So around 11:30, they've taken a turn. Okay, they've taken the liquidity and taken a turn and started moving up. This happened at what? 1 o'clock. Okay, they took a turn exactly at 1 o'clock, came down 2:30. They came, took the liquidity here, played around. Then at 3:30, again they started going up.
mm,
Manipulated the last 10 minutes uh, at 350 macro, and then they went up till 4 o'clock. And you can only take a trade till 4 o'clock. Beyond that, it's very limited. But again, they just went all the way up, started manipulating.
mm.
So if you point was there were opportunities, but very few opportunities to take a trade.
Mm.
So this is the reason why Mondays are very difficult or not worth trading sometimes. Okay. In Monday they're just trying to set up what needs to happen for the rest of the week. Okay. So there will be opportunities only if you're like willing to go to a very low time frame and things like that. But the same thing on Nasdaq,
Mm.
probably it would have been much more easier to take a trade.
Mm.
Okay. So sometimes people prefer going to Nasdaq to do the same thing. Um, and they might take a trade a lot more easily there. So Tuesday.
Mm.
Navi, you have time for another 5 minutes or
Yeah, 5 minutes is fine.
okay. So I want to see how it looked on. same thing, just like ES. Okay, they just went up. Again, 8:30 manipulation. Okay. So normally I do my standard deviations on the 5 minutes. I found that more convenient. So almost similar. Looks very similar to ES, right?
Mm.
Almost. It went a little higher than that. Okay.
Mm.
Okay. Again, same thing. Fair value gap here. Fair value gap here. Similar. It looks so much uh, similar. See, here there's an opportunity, provided you are willing to take it here. Because this you are already almost pretty much at premium. Because if this was your target, then you are already a premium. But if you had a higher target, then maybe you are okay. Okay. So you'll have to take. So again, this was the other opportunity, right? Again, market structure shift here, fair value gap, nothing here. Okay, fair value gap here, nothing here, nothing here, nothing, nothing. So nothing on the way down. Came back here, here. Hmm. No, Nasdaq isn't any easier. So only way you could have taken a trade was this was the only opportunity it actually gave for you to take a trade.
Mm.
So that's why Mondays are always very difficult to trade. That's the reason. Okay. So what I would suggest is if you guys have the time, try to do the same exercise for the other days. Okay, just like this. And then try and see how you could frame the trade. The other thing I would suggest is take a look at the daily profiles that are there in the presentation and try and map it to see if that can help you figure out the direction in which the price is most likely to go.
Okay.
Okay. Here also you will probably find trades, but on a 1 minute. I don't think you would have found a trade on 5 minutes. 5 minutes for sure wasn't there.
5 minutes is difficult most of the time, right? Like, but
No, you'll find trades. You can find trades on 5 minutes. So people take trades on 15 minutes.
yeah.
Okay. So it's possible. It's just that on some days it's very difficult because they are like literally they're just trying to do something, especially when you have such a huge move, right? This is one signature that you should look at. It's very rare that you can actually find something to trade in, especially in the AM session in
Mm.
the morning. And then you have to sometimes take a leap of faith to figure out, okay, uh, I just trade in the opposite direction because I know it's going to do this. But a proper setup ideally is become a little more difficult. So most of the times you can do that. You can just go to a lower time frame and then take the same trade because if you know that this is what is going to happen,
Happen.
then to make sure that you are not going to miss out, then you just start moving in the thing. You go from 5 minutes to 3 minutes. 3 minutes is actually a pretty good time frame uh, where you can actually see quite a few opportunities. Sometimes even if you miss it on 5 minutes, you will probably find it on 3 minutes. Worst case, go up to a minute. Anything less than a minute, it's tough. Even 1 minute is actually very, very difficult.
Mm. Okay.
Okay, I think that's it.
Yeah. Good.
Okay.
Thank
Okay,
you.
so when do we do the next session? Monday? Tomorrow?
Monday.